Hashpoint became a investor-focused, investor-centric model driving towards a cogent valuation model and valuation framework that made sense.
Brian, welcome. Thank you for hopping on.
I appreciate it. It's good to be here. Thanks, Brandon.
Well, it is my pleasure. Brian, before we really dig into it, could you just tell us a bit about yourself and how you came to build on Hedera?
Yes, certainly. I came to Hedera as a investor. My background is in traditional finance, and I was a tech investor and went down the rabbit hole on Hedera just like everybody else. And as an investor, Hashpoint came out of my desire to model, analyze, and value HBAR. It's kind of a twofold process. One is, analyzing the technology, analyzing the opportunity and getting sold on that. And then the second piece of that is it a good investment? And the amount of data, the amount of information, or separately, the amount of data that's available in blockchain and on ledgers and in mirror nodes is abundant, but the amount of information is actually quite limited. That data is not really in a usable form in its unrefined format. And so Hashpoint became a investor-focused, investor-centric, not exactly an explorer, but same type of model, but really trying to get at the underlying Hedera trends and driving towards a cogent valuation model and valuation framework that made sense. And it's challenging because a proof of stake token is a really unique asset. I can't find anywhere where you've got one asset with two different purposes. It's the currency for the network user, and it's an investment asset to stake. And so it's got two different demand curves, two different buyers with different incentives. And so to understand how to value that, it actually takes a little bit of sitting around with numbers and thinking about it and playing with valuation models. And I think what I've developed and what it's novel, but I think it captures the entire dynamic of HBAR and the role it plays in the Hedera ecosystem. And I'm looking forward to showing it to you.
Well, you're hitting on a lot of different points that I really agree with. Number one, that I think all of these networks, as time goes on, they're going to be evaluated more just looking straight at the data, kind of like a stock would be. Of course, it's very different from a stock, but looking at those fundamentals, how much revenue is being brought in and so forth to really dial in and figure out what these are worth. And the other thing is your path. Your path is similar to so many people. And I think when we talk about the HBAR community member or the Hedera community member, it's almost always completely synonymous with the HBAR holders. They are some of your first builders. They're some of your first users of all the products that we have in our space. And it's probably our strongest marketing arm that we have in the space. So they really are critical to the growth of the ecosystem. But you've already kind of told us a little bit about Hashpoint, so we can make some guesses around that. But why don't you walk us through it and show us some of the features?
Yeah, let me pull it up. The platform is built, as I said, it's a investor-centric platform. It's built for an investor. Most of the other network explorers have, if you want to know the time to consensus on node 31 of the last growth trade, you can find it. But for the perspective of an investor, the data is very curated. The way it's modeled and presented is to be informative to an investor. So most of the data on the dashboard is data that people will recognize in terms of TPS and transaction counts and that sort of thing. The one area that I think is going to be pretty important as time goes by is the revenue by service data, and looking at the transactions. Obviously right now ATMA is most of the transactions, but the interesting thing is the contribution. 99% of the transactions are ATMA. 94% is revenue, and if you even kind of toggle that out a little bit further, you start to see something that looks a little even different with almost 100% of the transactions from Atma, but only 83% of revenue. And that really just speaks to the multiple of revenue that is in the other services on the network. And if there's even, and I can show you, if there's even a slightest mix shift in revenue from the consensus service to these other services, the amplification on revenue is pretty steep.
And you have some pretty nice charting features as well, right?
Yeah, I've got to give credit to my brother, who is the developer. I'm the finance guy. He's the developer. So it's definitely a collaborative effort. But yeah, we'll go through some of these charts real quickly. Some of the network data and revenue statistics are things you'd expect to see and you'd want to see. We call out Atma here because right now it's the primary use case. But over time, as the composition of Hedera's business changes and the network changes, then this site will change too. Right now we don't have a use case breakout because again, Atma is the primary use case. But we, there's an ability here to look at all of these metrics by service. Again, consensus is most of the business, so this may not be the most, relevant to an investment decision at this point. But over time, I think this kind of segmentation is going to become increasingly important. The revenue charts, again, just so we can show trend revenue, and if somebody wants to get down into the details on this, you can get down into the monthly, and we could even take it down to the weekly and daily, but with an effort to not get lost in the weeds and kind of focus on what's important to an investor, we put some parameters on that. Again, here's that same look at revenue, transactions, and revenue by service. Again, you can look at this any way you want, by year, by quarter, by month, aggregate it any way you want. But again, it's really a trend analysis tool to look at the transactions by service and then see how that corresponds to the revenue by service.
Brian, another thing that I noticed that I thought was really interesting was the flow into account 800. I thought that was an interesting chart.
Yeah, the staking economics is probably, I think at this point, one of the most insightful charts. Certainly when I built it and I was looking at these graphs for the first time, looking at these visuals, I was really surprised by a couple of points. First off, the top panel, when you look at the flow of HBAR into staked rewarded status, it was about 7.1 billion when that transition from a 6.5% APY to a max 2.5% was made. And yet the amount of HBAR staked continued to grow. So that was not, I think most people thought that this was a trigger to maybe see a decline. But in fact, we saw the HBAR stake continue to increase. The other thing that's interesting is then when you get out to April, you do start to see this decline, and we've lost about 10%. And it's hard to correlate one for one what would have happened in April, but we do know that there was some turmoil in the Hedera community in April. And it would not be surprised to see that this kind of trend correlates to maybe diminished trust in some of the powers or the organizations within the ecosystem. But it'll be interesting to see if this begins to turn up as the TPS has recovered pretty nicely lately. These charts are the ones that I think really stand out, though. You see the turquoise is HBAR flow into account 800. The yellow is the staking rewards paid out of account 800. And you can see the effect of the change in the staking rewards program on those flows. And in the net, you can see what has happened. And what I think is probably taken, most people don't know. If you query most HBAR holders, they can probably quote two numbers to you, the current TPS and the current staking APY. And, again, it's lots of data out there, but there's not a lot of information. And I think this kind of information here and this kind of data gets lost. And that is that account 800 is now positive. There's a net inflow now into account 800, which means our staking yield, while low, is actually real yield. It's not inflationary. It's not paid out of pre-minted tokens, but it's paid out of transaction fees. So, I mean, I think that's a milestone that is lost on some people. I mean, you can still argue that this staking reward is too low, and the policy should be to pay a higher nominal reward to attract capital, or there's good arguments to be made that Hedera could be paying a higher staking reward than just this. But nonetheless, I think this is a milestone, and I think people should be aware of it. And then the last thing here is we've kind of built a staking APY projections chart so that you can see how these staking APY will trend at given TPS rates, the current. And then we've modeled 10,000 and 25,000, but the next iteration, this will be an interactive chart so people can take a look at their own assumptions and play with this model on their own.
Brian, I love what I'm seeing here. I love to dig into the numbers. I do feel like they could probably distribute some more tokens using staking. I think it's a good tool to get some of the HBAR out there and to attract capital, as you mentioned. But this is going to allow us to really analyze and dig into the numbers as in the future. I think it's going to become that much more critical, as we talked about before. Now, I was going to ask you, who your target audience, who your target user was, but I think you've explained that pretty clearly. It's the HBAR holder, it's the investor out there, and I think that's where we should be focusing moving on into the future. But is there anything else you'd like to pass on before we let you go?
The valuation model on this is something that I think it's unique and it's novel to Hedera, just given that Hedera has got a unique pricing structure within layer one DLTs. And this is a model that simply is premised on the idea that the value that comes in the network is the value that goes out of the network. You can't pay out more in staking rewards and node rewards than you earn in transaction fees over long periods of time. And this is a model that simply creates an equilibrium curve between the price of HBAR and the price and the staking reward that puts this network in equilibrium. And you can put your own scenarios in here and see how that equilibrium curve changes. And if you're a long-term HBAR holder, what you really want to know is, why am I holding it? I mean, what's the potential return here? And this tool, I think, lets people really visualize if the 100-year network delivers and the TPS scenarios, get to the level people think they could, then, the reward should be quite handsome and people can model that out for themselves here.
Well, Brian, I really appreciate you building out this tooling, and thanks for coming on today and telling us about it.
I really appreciate the time, Brandon. Thank you.
I'm now posting these interviews of Hedera builders independently to my channel. The community, influencers, and media outlets are free to use this content to spread the word on what's being built on Hedera. Once they're all uploaded, you'll be able to go to my channel and search for whatever topic or team you're interested in to find more information. Or you'll be able to get the most recent Hedera news by watching the latest HBAR Weekly update. So check them out.